Is the market about to trade like this notorious meme stock? Stay tuned because I'm going to cover the spooky correlation between the VIX and a well-known meme stock and answer the question, are we about to experience a market crash on par with the Great Depression, or could we go higher from here? Call me crazy, but when we take a look at the weekly chart of GameStop, we can see this massive falling wedge pattern that was forming for over a year. When we took a measured move from the beginning of the pattern and drug it over here, we can see that it was targeting around 80, which is where it actually spiked up to. It bounced very strongly off of this $10 support level. And I think this is an excellent demonstration that even multi-year patterns will break out as expected. We can see that we had a series of basing patterns that essentially walked this move up higher and higher. With each basing pattern, we moved just a little bit higher until volatility broke out completely, leading to this utter parabolic move. And as you can see, that wasn't the last of volatility. It took a little time, but we actually got another parabolic move, which was very close to the initial one. Taking a look at the VIX, we can see a similar pattern that's set up. We had a basing here with bullish divergence, another basing on the RSI here, and then we also had what they call a hidden bullish divergence here, where this had a lower low, whereas this had a higher low, and then we went parabolic. As you can see, we also had another bullish basing pattern here on the RSI with a corresponding breakout in volatility. Zooming out to the 4-hour time frame, see how the VIX not only broke above this key resistance line in blue, but also temporarily broke above this purple resistance line, which is even more significant. Now, the VIX is going to retest this $19.50 to $20 area. And the question is, will the VIX spike again if it bases off of this key level? Or will it break down below and allow the market to see new all-time highs? I believe the reaction at this level is really going to show market sentiment. So the biggest question in my mind in terms of the VIX in comparison to GameStop is, are we here and the VIX is about to rip faces off the bulls, or are we here and the worst is behind us? And when we look over here at this other spike, you have to keep in mind that volatility could absolutely peak again just as it did here. We're about to go deeper into SPY analysis and what patterns are developing there, but first, if you're loving these videos, please tap that subscribe and notification bell. I can't make videos in real time, but I do share updated analyses on the community tab, which you probably won't want to miss. Looking at the community tab on YouTube, just like I shared on Wednesday, that if we got up to that 531 key level, it was likely to reject, and that's exactly what happened. And as you can see, I do continually share updates as much as I can. And you can also find me on StockTwits. So what in the world is going on with the markets? We've got PPI coming out on Tuesday at 8:30 and CPI coming out at 8:30 on Wednesday, which will be huge market movers. But I've got a feeling that even the initial jobless claims number coming out on Thursday will be significant as well. As you can see, the market broke out of this descending channel and is now in what appears to be a giant bear flag. This doesn't look like a channel because, as you can see, the upper resistance and the lower support lines, they aren't parallel with each other. And if we draw a Fibonacci retracement starting from the high on August 1st, going down to the low on August 5th, we can see that we are very, very close to the 61.8% retracement, which is very often a place for shorts to re-enter and the downward move to continue. If we zoom out to the weekly, you can see where the baseline of the Ichimoku cloud is around 528. And just like I shared, once we broke below that area, we had a bit of a waterfall event, which I covered in my previous video linked above, where I also discussed entry and exit strategies and so much more. Now we're back above that weekly key level. But notice how the baseline of the Ichimoku cloud on the daily is right around 538. We will likely see a battle between the bulls and the bears at that key level. See this rising wedge pattern that formed on the 15-minute time frame into the close on Friday? It's targeting no less than a 6-point move down, and it has already broken below this support line. There is the possibility that it bounces off of this much longer term channel, which we have to zoom all the way out on the daily to see. This is going all the way back to like September of 2022, as you can see. When we zoom back into the 4-hour time frame and throw up a volume profile, we can see that this is kind of a least traded zone in between around 537 and 538. So if we break above this key level, the bulls can expect the next logical area to be around 545, and we could push as high as around 555 for a full fair value gap, which would correspond around the 5,550 level on SPX. Price may even try to retest this previous main support line, which would now likely act as resistance. Until a resistance line breaks, you should assume you're going to get a rejection from there. And even after it breaks, you should assume it could be a false breakout. You should always wait for confirmation, which often comes in the form of a backtest. Some analysts are pointing out how hard the market sold off back in April of this year and that they just rebounded. One could just as easily point out the sell-off between August and October of 2023, but in my mind, this price action only served to confirm the upper resistance and the lower support lines of this massive rising wedge pattern. Now that we are below that previous support line, there is nothing clearly indicating an uptrend other than your standard higher highs and higher lows. In other words, the uptrend is no longer defined. And if we zoom way out, we can see that if the market decides to correct all the way down to this main support line right here, it would hit around 350, 360 for a roughly 32 to 34% correction. At that point, I believe we could argue that most, if not all, stocks would be very attractively valued. If that support line even broke, we likely wouldn't see strong support again until we hit around 215, 155, and then possibly even 110. Let's hope that doesn't happen. When we take a really quick look at the ADD, the Advanced Declining Difference Breadth Indicator, it's simple. From August 6th to August 8th, we were trading above this support line. Then on Friday, the whole market broke below it. And one could argue that this potentially could act as resistance if the market tries to come back. And last but certainly not least, we're going to take a look at the Dollar Strength Index, the DXY. Something happened on Monday, August 5th that really caught my attention. If you recall this falling wedge pattern that I pointed out before, there's actually the possibility that this is still in play. Do you see how price touched this previous resistance line and bounced sharply right here? If we quickly zoom out to the weekly, we can see that we had this bullish hammer candle that came off of that. And if we zoom out just a little bit more, we could see on the RSI, you could see the symmetrical triangle pattern. And now potentially we're starting to form a bullish divergence. We're in the beginning stages of it. When we zoom back into the daily and we take this measured move from this falling wedge pattern and we drag it over to where this appears to be basing from, now the question becomes, was this all one giant retest of support and DXY is about to begin heading up to around 114, which would have confluence with this upper major resistance line, or will the symmetrical triangle pattern play out, taking it down to around 99? We're currently below this main support line in red, but above this previous resistance line. And if we throw up some trend lines, we can see that the DXY might be trying to form a bullish falling wedge pattern here, but we'll have to see more price action to confirm. Remember what I said in my first Unboxing the Markets video? We often see reversal patterns from a near key level at the end of a cycle move, leading to a reversal of price action. If they can switch this resistance into support, there actually is a possibility that the larger falling wedge pattern plays out, which would occur over many months, but they have to break back above this red resistance line. Until proven otherwise, this looks like a big bear flag to me. I think the bigger question, if they break above resistance, would have to be, how will the market like it? When we take a look at DXY on the 1 hour, this was on that Friday, we had this big sell-off all the way into Monday. And wouldn't you know it, the overall market did the same exact thing. The dollar and SPY both went in tandem. So even though usually there's an inverse correlation between the dollar strength and the overall market, they can move together. Ultimately, it comes down to what is actually moving the markets. Right now, we're above the 200 and the 100 simple moving average, and we're touching the 10-day simple moving average. But notice how the 21 and the 50 simple moving averages are converging right here, which will very likely act as strong resistance right around 543 if we get up to there, which also has confluence with this resistance line. And also notice how the 21-day moving average is potentially about to make what they call a death cross over the 50. Keep in mind that patterns can morph, and we have no way of knowing how price action will unfold until it actually happens. This is why it's so important to know how to chart and analyze yourself. I could be wrong. I am wrong all the time. You have to remember that TA is all about probabilities and never certainties. If you're loving this content and feel that you're actually learning valuable information, please consider sharing my videos with your friends and family so that as many people as possible can potentially benefit. And stick around for today's trading rule to live by. As always, nothing I show is financial advice, and best of luck, cool cats.